Hey, soldiers, I want you to imagine a world in which home buyers who have a lower credit score end up paying less than home buyers who have a higher, better credit score. If you can imagine such a world, congratulations. The economic illiterates in the Biden administration are way ahead of you. They've actually established this very philosophy. It's going into effect. This is not a proposal. This is going into effect May 1st, okay? We're going to show you how, in their infinite wisdom, sarcasm, definitely emphasized here, and there's no better explanation for them than economic illiterates have chosen to incentivize folk with less in terms of. Hey, soldiers, I want you to imagine a world in which people, home buyers with lower credit scores, make out better financially and end up paying less than home buyers with better credit scores. That's right. All of that work you did to get that, 800 credit score, you paid every bill on time, you managed it, and you looked at it. Guess what? The guy down the street who never really worried about it until last year and said, hey, I probably need to get my credit together, and he finally achieved a 680, he is going to make out better than you, okay, when it comes to a mortgage loan. The economic illiterates in the Biden administration have crafted just such a philosophy. This is what we are going to be going into and realizing as a nation. This is not a proposal. This goes into effect on May 1st. Now, guys, we're going to get into it, and I'm going to tell you all about it. But first, what I need you to do is go ahead and subscribe. Subscribe to the Soldiers of Finance channel. Become a soldier by enlisting. All you need to do is hit subscribe in order to do that. Let me know you did it in the comments, and I will salute you. Also, everybody, go ahead now. Hit that thumbs up. Let the YouTube algorithm know that you appreciate the work we're doing to put this economic news out there and to delve deeply in it. Go ahead and hit it now. I'll tell you what, if you don't like the video, uncheck it, okay, when you log off of it. But go ahead and hit it now. I guarantee you will not regret that. Guys, as I said in the previous video, I am in the process of multitasking. I'm out here fertilizing these fruit trees so that my family can, grow its wealth by being able to subsidize our calories and not depend totally on the man. All right. So I would encourage you to definitely look for those opportunities in your own life. Wealth in this world needs to be recharacterized. It is not the high fashion. It is not the hot car. Okay. It is being able to be as self-sufficient as you can possibly be. That is wealth. All right, guys, let's jump right into this. Everyone with a credit score 680 and over is now dinged with this new Biden policy. Everyone with a credit score below 680 they're a winner, okay, under the new Biden policy that is, I guess, designed to somehow redistribute wealth. Now, listen, I bet you when they said, oh, we're going to redistribute wealth, we're going to get the money from the rich, a lot of people are finding out that they're rich, okay? Yeah, sure, you're making, 80 grand and you got a great credit score because you did what you were supposed to do. Guess what, buddy? You're rich. A lot of people are finding that out today. New mortgage rules are so absurd that only President Biden and other progressive minds could come up with it. Because again, remember, in the case of President Biden in specific, he has never operated a legitimate business. All right. He's been in the Congress in the form of the Senate or the White House or Blair House for his entire adult life. I know he was a lifeguard at one point and he took on Corn Pop. And, that's basically his only private sector experience. All right. Janet Yellen, we've got her as the Secretary of Treasury. She, is a college professor. These people don't occupy the world in which we occupy. OK, the world where you go out and you create something productive and in order to make the world go. OK, the people that go around, I always say this, the people that collect the garbage from the neighborhoods, they are essential to this society, more so than some senator, some Lindsey Graham or, Chuck Schumer. All right. Lindsey Graham, Chuck Schumer, let's say the whole Senate took a month off. 6 weeks, okay? Now let's say the people that do the sanitation work in the neighborhoods take 6 weeks off. Which one is going to impact your life more seriously? All right, because we're not just talking inconvenience. We're talking disease. We're talking rodents, a whole downstream effect. And when I say rodents, I'm not referring to the senators that we spoke about before, although I guess some could characterize them as that. Fannie Mae and Freddie Mac will enact changes to fees known as loan level price adjustments on May 1st, 2023. So we're less than a month away from that. That will affect mortgages originating at private banks nationwide. So we're talking Wells Fargo, JP Morgan Chase, Bank of America, so on and so forth. This effectively tweaks the interest rates paid by the vast majority of home owners. The result, according to industry pros, pricier monthly mortgage payments for most home buyers. An ugly surprise for those who worked for years to build their credit, only to face higher costs than they expected as part of a housing affordability push by the U.S. Federal Housing Finance Agency, the FHA. It's unprecedented, added David Stevens, who served as FHA commissioner during the Obama administration. My email is full of mortgage company CEOs telling me how unbelievably shocked they are by this move. So you've got a guy who was appointed by Obama saying this is just crazy. All right, that's how leftoid this is. Under the new rules, high credit buyers with scores ranging from 680 to above 780 will see a spike in their mortgage cost. So again, you did the right things. You went out and you refrained from buying the most expensive car. Okay, you put money away as opposed to went on the lavish vacation. Okay, you got the inside room in the cruise ship, not the one at the back of the ship with the suite that faces the ocean. You did that. Okay, but guess what? Now your government is saying, so what? You were disciplined. Now we're going to take your discipline and put it to the advantage of those who weren't financially disciplined. Okay, so again, those with credit scores of 680 to above 780 are going to see a spike in their mortgage costs, with applicants who place 15% to 20% down on the house experiencing the biggest increase in fees. Okay, so you go out there, you find a nice little, $200,000 home, and you say, hey, this is the right thing for us. Again, we've saved, we've been disciplined. We got our 40 grand that we're going to put on this bad boy. And then the government comes in and says, oh, by the way, under the revised LLPA pricing structure, a home buyer with a 740 FICO credit score and a 15% to 20% down payment will face a 1% surcharge, an increase of 0.750% compared to the old fee of just 0.25%. So it's going from 0.25% all the way to 1%. When absorbed into a long-term mortgage rate, the increase is the equivalent of slightly less than a quarter percentage point in a mortgage rate. On a $400,000 loan with a 6% mortgage rate, that buyer could expect their monthly payment to rise by about $40, according to calculations by Stevens. And I know a lot of people, I can afford $40. But yeah, going to you, right? Imagine if you were able to put an extra $40 on your mortgage. Break out a mortgage calculator and do the math on that. Just adding $40 per month on your mortgage. What a difference that would make. Meanwhile, buyers with credit scores of 679 or lower will have their fees slashed, resulting in more favorable mortgage rates. For example, a buyer with a 620 FICO credit score with a down payment of at least 5% or less gets a 1.75% fee discount, a decrease from the old fee rate of 3.5% for that bracket. So again, this is like Bizarro World. This is the mirror universe on Star Trek, where everything is reversed and now good is bad and bad is good. This reverse pricing of mortgage rates is so insane that the author says I'm at a loss for words. Okay, so people are like, what the hell is going on here? Is this supposed to incentivize people to buy more houses that they can't afford? All right, this is the same kind of thinking that got us into 2007, 2008 and the Great Recession. Look, there was a time in my life where I couldn't afford to live in the neighborhood I live in now. Okay, I didn't have the income, I didn't have the credit, and that was okay. I just said, I need to, work, and I need to be more industrious and inventive and come up with ideas on how to make money. When my wife and I got together, she was very, and remains very good at credit management, and I was and remain very good at investing. Okay, and we put those two things together and made a Reese's peanut butter cup, chocolate and peanut butter, put them together, and we had something great. So we worked at it, and never did we walk around here thinking, oh, well, somebody's discriminating against me because I can't live over there. Okay, we used to take drives on Sunday morning. We used to take drives through nice neighborhoods and say, oh, wow, what a nice house. What a nice house. Maybe one day we'll be able to, have something like that if we continue to, do our thing, put our minds together and work cooperatively. And it actually happened a little sooner than we thought it would, okay, in life. But the point is that we played by the rules, okay? So where's the incentive to do that here? Where is the incentive? Because the government is saying, hey, the worse your credit, the better off you'll be in terms of trying to buy a house. Mike England, all right, says in a tweet, if you're buying a house, it presumably would be smart to default on all your credit cards first so you can get a better mortgage rate. So this guy, Mike Miss Shedlock, comes back and says, it's an excellent point by Mike England, except change default to late pay for a few months. Okay? It's insane. 1/3, and this is Steph Palmboy, 1/3 this rule to impose fees on home buyers with I don't have Twitter. I thought it said 1/3. My bad. She's saying this rule to impose fees on home buyers with high credit scores in order to subsidize access to lower quality credit is so obviously misguided and dangerous. It makes you wonder what the real objective is here. Absolutely. She goes on to say, we just learned this morning that nationwide home prices are declining for only the second time in U.S. history. And per Philly Fed, the LEI, that a deep recession that throws many out of work is on the doorstep. And now is the time to encourage stretched would-be home buyers to enter the market? Right, we're setting up another 2008 or maybe worse. It's almost as if they want to drown people in negative equity, or maybe to further invigorate the banking system to allow for a larger takeover, or the establishment of a CBDC and the total rearrangement of the relationship between the Fed and the banks. I've told you many times that in America, the private banks are owners of the Fed, okay, which is a totally different arrangement than the Bank of China, the Bank of England. The other central banks are owned by their governments. Is this legal screw job on mortgage pricing even legal? If it isn't, it's going to take a while to determine that and flow through the courts. And then what are you going to do once someone has signed a mortgage contract at the lower rate? That's a legal contract. How are you going to go back on that and force them to pay more? The author is saying, yes, it is illegal. We have graduated income taxes, and that is legal. We also have adult prices versus kid prices for numerous things, and we have things like senior citizens days. But can we legally charge someone more for a loaf of bread if they make too much money? That is what this is. This is social engineering. This is, again, redistribution of wealth. Similarly, can we unjustly penalize people because their credit score is too good? Author says they don't know. But I do know blatantly woke stupidity when I see it, expect someone to file a lawsuit. Okay, so yes, lawsuits are coming. It's just an inevitability. Meanwhile, please note California utilities seek to charge people based on income, not energy usage. Under a new utility proposal, monthly bills in California will include a fixed charge based on household income. the proposal is a Marxist agenda. Absolutely. And we talked about in previous videos that the United States is starting to, in my opinion, one of the scenarios we're sliding toward is a South African style of government where you got, and it won't be as full blown as quickly, but there are a lot of Marxists in the government. You can tell these proposals that they're coming out with have a Marxist element to them, a redistributive element to them. And this stuff is starting to take place, okay, here in America. So what is the incentive for you to go out and have a great credit score? I'm not suggesting that you shouldn't do that, okay, because at some point sanity will prevail, all right, I hope. And you don't want to handicap yourself by having a bad credit score. This guy was being sarcastic when he said, don't pay your mortgage or be late on the credit cards. I would definitely not suggest you do that. And under this inane proposal, the proposal whereby California is suggesting people with higher incomes pay more for their utilities, people may pay for services they do not use at all. Expect a legal test to this too, assuming the bill passes. And I bet it will pass because it is California, okay? They say, as so goes California, so goes the nation. So the rest of the nation can expect, some insanity like this at some point. Guys, it's getting real in the field, and that's why I continue to stress. Look, this is not fear porn. That really gets under my skin, to be honest with you, when this type of content, not just from this channel, but from, financial channels that are out there on YouTube that report this news. Look, if you think it's fear porn, then just turn it off, okay? All right, I like to have people subscribe to the channel, and I like the back and forth dialogue, and 99.99% of the viewers here appreciate that, and they get with the program. But there's an element that wants to stick its head in the sand and ignore these things that are going on. And that is part and parcel of how we got here in the first place. Because we've allowed, as citizens, okay, we can't blame this whole thing on the government and the politicians. We've sat back and watched the debt balloon and kept on putting the same politicians in office, okay? We've sat back and watched us get closer and closer to insolvency on entitlement programs, and we haven't said anything, okay? In fact, we pushed back every time they've suggested that maybe because we're running out of money, the age for retirement to get Social Security should be raised, okay? We push back on that. So we're part of the problem as well if we are being honest with ourselves. Now, there are a lot of pressures out there, absolutely a ton. One of the pressures on Americans is that wages have been dropping for 2 years straight, all right? That 2 years coincides with a set of economic policies that apparently are not working. I want you to check out this video and understand what you may want to do in order to insulate yourself from this trend of falling wages. All right, guys, I'll talk to you soon.